Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, July 11, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Wouldn't you know it, but we finally had what we'll call a down day. I know it's rare, but we had a down day. It's a pullback operation. Is it a bona fide reversal day? Going by the book, it is an outside day to yesterday. What does that mean? It means the high of today and the low of today were outside of yesterday's. The closing price was also below yesterday's low on an uptick in volume. So by the textbook, that could be considered a reversal day. Keep in mind, the market is still in an uptrend, but remember, she was getting a little bit far from home base. She likes to come back to check in at least down in the neighborhood of home base. Go sideways for a little while. Let home base creep up to price. The S&P down about 50 points today achieves part of that goal really quickly. This morning, we had the alphabet soup CPI data shuffle at 8:30 a.m. Eastern Standard Time. What was the title of last night's video? CPI rug pull, sell the news. What did they do? They sold the news. It's an excuse to work off some of the, air quotes, overbought condition, a la coming back toward home base / the 20-period moving average. But wait, there's more. And before we get to the but wait, there's more, there's a couple of other things that we have to note. And I talk about this in the live room. I talk about this in here from time to time. When we get into these markets that just grind up new highs, looks like the market is just going to keep going forever. They always find a place and they always pull back. It's a matter of from when and where. We talk about looking for a sign and or signal of a trend change. Well, technically speaking, we have that signal right now. A trader could say, look, we have a reversal day at hand. And again, we're going to get to the but wait, there's more stuff in a moment. And a trader could say, I'm going to short the market against the high from today. The high is 562.33. Any daily close above that high, the trade would be wrong. It's off the table. You have to cut and run. That is one way to do it if this is a bona fide reversal day. Wasn't tremendous volume, but it does qualify nonetheless. What else do we have? Here comes the but wait, there's more. We have a reversal candle on the 4-hour chart, the half-day chart. No surprise, reversal candle on the daily chart. Makes sense you'd find one on some other charts as well. What about a 2-hour chart? Nice big juicy reversal candle first 2 hours of today on some volume. Again, reversal qualification right into the what? 20-period moving average on the 2-hour chart. What about the 1-hour chart? How about riding the 20-period moving average underneath it on the 1-hour chart, putting in a bearish, flaggish pattern? Cannot recapture, at least today, could not recapture the 20-period moving average. Of note, puzzle piece on the table. So Mrs. Market is giving us indications that there is a corrective move at hand, a reversal in the making. What would be the first ideal place that she would want to revisit? Where would be the first place to expect that good old bull-bear battle situation? About 550.12. The blue trend line just showed up. Why is that? A, you got a big fat round number, 550. B, market ran up to this place, couldn't get through right away, ate some time off the clock / pulled back a little bit, then broke out above. This does constitute the most recent breakout area on the daily chart, and therefore we would expect her to come back and revisit that area. What happens if she gets below it? Well, right below it, you have the daily chart 20-period moving average. And below the 20-period moving average, write this down, put it on a sticky note, you have 545. 565. That's an important number. Write that one down. Tomorrow, we have the PPI data release at 8:30 a.m., the second part of alphabet soup this week. Will she reverse the reversal, or will she have a continuation move on the number? Let's see what we got from an inside the numbers perspective. You can read the notes, pause the video, double check the work. We'll highlight a few important things. We'll use 559.75 as our early bogey and bull pivot, meaning the market's going to stay bullish. She's got to stay above that number, 559.75. Right of the vertical is today's activity. You could see the market was rising early in the morning. It was a little bit of a rodeo in the pre-market. She spiked it up, came back to the flat line, spiked it up again after the open, and then came back down to the flat line. 559.75 was the pivot. There was a small trade at the pivot. We did get a base hit out of it. The high in this candle was 560.37. They gave us the base hit. Our base hits are 5 to 7 S&P handles, 50 to 70 SPY cents from entry. We don't let the remaining portion or the trailing portion of the trade go bad on us, so we take a base hit. We pile up the base hits. Base hits put you in the Hall of Fame. Now, because the market's up so much, my next really important place was down at 557.70. That was a gateway to another leg down, 557.70. Now, you'll see she cut through that area like a hot knife through butter, came back to retest it, and fell away, couldn't recapture it. There was a zone down here. You'll see later in the notes, the zone was 70 cents, 557.70 down to 557. They spiked that. They did bounce back up, but did find resistance at the original 557.70. And basically, the market just fluttered down in that area for the rest of the day, below, and then tried to get back to it. Remember, pause the video, read the notes, go back to the chart, and double check the work. The ES spiked 5,700 this morning. That was where she was going on the data release. We had a pre-market high. She didn't get back up there, but it's all in here at new highs. When she's pushing at new highs, we didn't have any formula-driven numbers today, so we were a little bit flying blind at new highs. So there's nothing to do until they came back down. Pause them, read them, go back to the chart, and double-check the work. Everything that we just went over is all in here, including the next leg down. 555.86 was one of those numbers. And there you see 555.86 and the bounce off that number. Nothing hit from stocks on the move today. We had 3 on the board possibilities: On Semi, ALK, Alaska Air, and Delta Airlines. Well, Alaska hit. Sorry about that. You see Alaska's entry was 35.54, and there it is on the chart at 35.54, a little bit above low of day. There was some other stuff that went on in the live room today. I want to go over a handful of things. We had a plethora of other trades that came up as some of the volatility came back to the market. Stuff was moving. Opportunity shows up. So let's see what we picked out. These are just a few of the selections. I only bring up CRM. It hit yesterday from a live room perspective, but we had some traders that took the trade and actually held overnight, so they were paid accordingly in CRM. Apple was another trade. You could see 228.55 right there about 10:20 in the morning. They bounced up to a high of 229.84. And the secondary number was 227.10. You see what happened there, right back to 228.55. We had traders made money on the long side of Apple today. We got to go over this one because yours truly had a trade idea for the live room only today. It was in the IWM. The thing was screaming this morning, heading to what I thought was the destination, was a zone between 208.60 and 209.50, and essentially it didn't work. I was a shorter there, ended up taking a hit, so did some traders in the room. I got a case of the humble pies today. That happens. But we don't run away from these situations. I put it out there. This is what happened. I'm not perfect. I can't win every trade. It doesn't work like that. Thought I had a good beat on the IWM, and I turned out to be wrong in the IWM today. However, there's always a silver lining somewhere. We had traders in the live room that took the retest when they gapped above the trend line. What are we talking about? Well, you go back to the daily chart. Here's your triangle pattern. They gapped above it today, came back for a quick retest. Traders bought the retest and took the ride. How good was that? We've got something for everybody. Some traders don't like the short trades. Some traders only like long trades. Some traders like every trade that I ever mention. Some traders are very selective. They'll never take the first price I give. They'll wait for a spike. They'll wait for a second price. There's all kinds of strategies, all kinds of traders out there, all kinds of risk tolerances. We've got something for everybody, from the conservative all the way to the gunslinger. We'll finish on a positive note. We had AMD in the live room today. 180 was the number. Had given it out for the last couple of days, or at least yesterday. And they had a nice bounce off 180, making a high of 182.39 pretty much right away. So we definitely had plenty of traders making money today in the live room. About the lazy swing trader, here's another profit target hit today in Ralph Lauren, RL. About a couple of weeks ago, trade was issued at 172.90. Profit taken today, as you see, got up to 184.74. Lazy swing trader, automagical algo system. Getting back to the daily chart over in Camp IWM, you see what happened. We talked about this triangle. Below the lower trend line was a breakdown. Above the upper trend line is the breakout. Instead of having to work their way through it, grind through it, chop through it, beat their way through it, they just gapped over it, ran a quick test, got out of there like a bat out of hell. Already testing the high up here. They didn't quite get there, but they got very close. The trader might ask, what happens if they eclipse this high up here and they actually go another leg higher, regardless of whether there's a pullback or not first? What is the next number? Funny you should ask. A spike of 216 is a target. There are other resistance points in between, but I believe that's the major target that they would be wanting to get to if they eclipse this high. This high officially is 211.88. Big volume today in Camp IWM on a breakout volume, unlikely the final move, regardless of whether there's a pullback first. Unlikely the final move. Should be higher prices on the way in Camp IWM. Russell, the small cap space. Remember the divergences? Well, guess what? One of the two things was going to happen. Either the IWM and, for that matter, and we'll look at the transport second, those two are either going to turn around and follow suit with all the other markets, or the other markets were going to drop down. Now, the funny part about that whole thing is the other markets did drop down. Qs were down today. We'll look at that later. The spiders and the S&P was down today. The transports and the IWM were ripping in the other direction. Kinda interesting. On volume. Case in point, here's the trannies on volume. Again, just like the IWM, right into the 100 period moving average, up 330 points today, and then some, finishing near the highs. 15,563 is the target, at least the near-term target. If she gets back above all the moving averages, you know what happens. You have a new friend in the trend. Remember the weekly chart, the bigger picture triangle. Look where they are. They're into the convergence still of the 20 and the 50 period moving average. If they get above 15,563, the next big time target would be up to this trend line in that ballpark / neighborhood. What about the Q people? We have one of them reversal candles on the daily chart on volume. Does this thing just get reversed and go away, or is there follow through? Where's the first place the follow through takes us? Right here, same routine, nothing changes, coinciding in the neighborhood of the 20 period moving average. What happens if she gets below the 20-period moving average? 482 is a big-time number, a big place. It's important. Write it down. Put it on a 3M sticky note. What's she doing? Coming back to run a test in the neighborhood or below of the 20-period moving average / home base. 42.25 was a target in the XLF. It's important. Where did they close today? Closing print was 42.24. No accidents nor coincidences. 1 penny below, but this was on volume. Again, this is bullish. Above all the moving averages, trend is your friend. Nothing wrong with the financials. They're not falling apart. Small caps were up. Transports were up. Financials were up. So we had some tech down. We had other stuff down. But there's a shift going on. Could be a rotation, so to speak. Baby with the bathwater, smash mouth down pretty good today. We had a failure. So far, they spiked their head above the old former all-time high, not from that long ago, right here. This was in June on the 20th. But they've also come down on volume, headed back for the 20-period moving average. Get below the 20-period moving average, and you're going to find that 261 is extremely important. And if below 261 on daily closes, that could be an Irene situation. Write it down, sticky note material. Let's go over some stocks that were on the move today. It's worth a look for the Fab 7. What do we have in Amazon? Coming into the 20-period moving average, what else we got up there? Just so happens, 191.70 is the former breakout area. Coming below that number starts to open the door to come closer down to the vicinity of the lower portion of this particular daily chart breakup candle low. So the low is right around 187. Doesn't mean they have to get there, but the door would start to open. Live room members will have intraday numbers in between. Apple working off some of this overbought, quote-unquote, air quotes condition, coming back at least in the vicinity of the 20-period moving average. Now watch this. Most recent breakout area, a little above the 20. Could also make a case this isn't exact science. There's part art form to this. This area here is also a breakout area, just a little below, maybe $1.50 below or so. You come into the 20-period moving average, and then the calculator comes out with another number there. You want it? 215.75, just below the 20-period moving average. I'd write that one down as well. About Mickey Soft, came into the 20-period moving average. Haven't visited it in a few weeks. As you can see from the weekly chart, high on the chart. Above all the moving averages, trend is your friend. All this is a corrective day. It's a down day. But anywhere near 435, 433, 432, that's going to be an interesting area of support. Write it down, sticky note. That's a big time spot right there. All the markets are doing the same thing. All the stocks coming down closer to the 20-period moving average. Got a little far away from it. Coming back to it, it's like a magnet situation. No magic. All charts act and react the same way. NVIDIA down 5.5% today. This one's a different routine. Here, you have a lower high. So you can't help but notice this. You have a high. They never were able to test the old high, and they just put in a lower high. That's bearish. Your SMH was getting killed today. Is this a tell of something forthcoming? I would say for now, we'll use this breakup candle low as a bogey around 121, 122, up in that neighborhood. It's actually 121.36. Use that as your bogey. Stay above that, she's okay. Get below that, she's coming back down toward the 50-period moving average, where anytime soon, that could be a buy 'em with both hands. It's a real-time situation. We'll be all over that in the live room. Meta, right back to the 20-period moving average. No magic there. You go to a weekly chart. What's she doing? She broke out, at least tried to break out, coming back a little bit. Was it a false breakout or not? We'll see where the week closes. But above all the moving averages, the trend is your friend. It was a down day, albeit 4% in Meta, 5.5% in NVIDIA. The others were 2 or 3%, but still, things start somewhere. How about Tesla down about $22 today, or over 8%? But look where it was. Way too far from home base. We didn't know where they would get to exactly until she got there, but now that she put in a reversal, we know she's going to come back toward home base, or at least give home base a chance to creep up to price. This was lofty. It was too far, too fast. Call it whatever you want. But this also is a reversal day on volume. This is a bona fide reversal day. So think about this logically. You have a lot of reversal days out there, accompanying volume and the price, the candle, everything you want to see for a reversal day from the textbook situation. That doesn't mean it's going to work out, but it's information. It's puzzle pieces. We put them on the table. It's data that we need. It's factual information. We have reversals going on. We need follow through for the downside, or are they going to reverse the reversals? And if they do, well, that's a whole different situation. A little bit of a head scratcher with the IWM and the transports screaming in the upward direction today. Everything else reversing, more divergence, but the divergences themselves were catching up, but yet creating new divergences. Go figure that one out. I'll let you chew on that for a while. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.